Vice President.
With representation has not been such a good idea either. Good morning, everybody. On this beautiful, it was a nice morning, a little cold to start with, but it's turning into, I think it's going to turn into a nice day. This 10th day of February, right here in Rutherfordton. You know, the most researched tax show on the radio. And I've actually been doing so much research, I don't know what to talk about. There's so much going on. My name is Gilbert Carmona. I am a tax preparer. I am an enrolled agent licensed by the Internal Revenue Service to represent taxpayers in all matters, including tax preparation, appeals, and arguments, and taking a position on a tax code and defending that position. Among the many things I do, including business consulting and financial planning and a few other things. I have an office right here in Rutherfordton, 113 Whitesides Road. I have an office in Polk County, downtown Tryon at 226 South Trade Street, the beautiful Art Deco building right off the historic downtown. If you need to reach me, my telephone number is 828-289-9300. Now, this is a live program right here on WCAB 590 AM. You can call the studio, 287-3356. My engineer this morning, Todd, will be more than happy to take your call. And if you have a question, you can ask me. I'll try to answer it live on the air. Otherwise, I will probably have to research it a little. I've been getting some pretty tough questions, I got to tell you. I will try to answer it next week if I can, or you can call me. You can send me an email at gilbert@gilbertcarmona.com. Those of you live streaming at www.wcab59.com, Northland Cable Channel 5 subscribers that are listening to us on Northland Cable Channel 5. Good morning, everyone. Now, we had some technical issues with the WCAB website, but I think we got that resolved. The live stream button wasn't showing up. But what was the workaround, Todd? They have to press the...
There's a little settings icon.
There's a little setting icon.
And you click it and request
You click it and request desktop setting. And you'll get the old desktop dashboard back. But Bill, our internet specialist, is working. He probably hasn't slept last night since we notified him of this problem. Been working on it. So he should have that resolved for you, those of you that live stream me. And quite a few of you do. And I'm really grateful for it. And I thank you for tuning in and listening. The program is Gilbert Talks Taxes, although Gilbert likes to talk about a lot of things. Taxes being one of them. But we talk about a lot of things because it's all about taxes. Every financial decision, every financial event eventually gets back to taxes or affects taxes. And what we're seeing happening in the economy right now is a lowering of taxes. Just when our president was elected, just the fact that he was going to lower taxes was a shot in the arm to the economy. And I've heard, I mean, I just find this hard to believe. I woke up this morning just really praying, God, what do I talk about? Because there is so much going on. I mean, it's tax time. There's a lot of things happening with the IRS, just a lot of things. Most of it's good. There's really nothing for this time of the year in the tax cycle that we're in, the tax preparation cycle, but there's just a lot going on in the world. And ultimately, all of it does affect us, and there's things I want to comment on. So many things I want to comment on. I am going to talk today. I promised farmers 2 weeks ago that I was going to talk about Schedule F for farm. I was going to talk to farmers a little bit about Schedule F. There's no major changes underway, but I was going to get just a little bit into Schedule F. And to people that are considering setting up a farm, I was just going to hit on a few things. I told them that 2 weeks ago. Last week, I started to go in that direction, but got a question and kind of went in another direction. So I am going to talk a little bit about that today. And for those of you that are considering starting a farm, or those of you that have been already doing some things that could qualify you as a farm, and you maybe want to take it to the next level and actually make it a business and start reporting it on your tax return. I am gonna talk about that a little bit. I'm also going to talk about I've had two people. One sent me an email to ask me questions about this, and I had another situation happen in my office. If you're an employer, what are your responsibilities with W-2s, getting them out to employees and all that stuff? I'm going to get into that a little bit because that's a whole topic, and I'm going to recap the tax law that just went into effect going next year. But right now, let me go ahead and get my political analysis out of the way. Let me go and get into that first, Todd. I talked last week a little bit about, I gave my thoughts on the State of the Union address because everybody else had already done it, so I thought, why not give mine? And I'm pleased to report that President Trump's approval rating here at Gilbert Talks Taxes is still at 100%. Okay, for those of you that were wondering, it's still at 100%. I know the economy's been going up and down, and it really literally has been going up and down. It's been a 20,000 point spread. It's been incredible. But it just goes to show, several people have said to me, aren't you worried about this? Because I've gone on record as saying the economy's where it should have been all along, but because of regulation and all these things, it's really been stifled. And then I heard somebody in the media say that the reason the economy is doing so good is because of Obama's economic policies that are finally kicking in. I know, Todd. I know. I couldn't even believe that somebody on the media would actually say that with a straight face. Because if after 8 years you didn't get it right, on year 9 it's not going to kick in. Okay, it's just not. It doesn't work that way. These impacts are felt immediately. I mean, it was the 3 days after the election the economy took off. That just because it's behavior. And that's the thing I keep seeing, behavior. That's the word that keeps coming to my mind, is the behavior. So this morning, as I was preparing for some things, there was just so many directions I wanted to go, but I want to talk about this. We're in a world today where there's just no respect anymore. There's no respect for our president. There's no respect for our vice president. I don't follow sports just because I don't. It's just something I just don't. I'm just not into sports. It's interesting that the Olympics are going on right now. It's been on the headline news. And so it's kind of hard to avoid it right now. It's the topic. It's on the front page of Google. It's everywhere. Everything you open up, it's the Olympics. And one thing caught my eye of everything going on. We have all these athletes over there, and the part of it is the American athletes that are saying if they win, they won't go to the White House if they're invited. Well, you've got to win first. Let's focus on that right now. I mean, they're just the haughty, the arrogance, saying what they're going to do and not do. And then there was another story where some of these athletes are just flaunting their homosexuality, and that's what the media picks up on. There's so much going on in this world right now, and that, to our media, is the top story. And they made a comment and they attacked our vice president, which, as far as I'm aware, Todd, maybe you can correct me if there's a story I missed, our vice president has done nothing to attack any member of the homosexual community. Maybe he has, other than being a Bible-believing Christian in a monogamous marriage who refuses to be in a room alone with a woman that is not his wife. Other than that, I don't know anything that man has done. And the scripture that I woke up with this morning, actually I didn't wake up with it. I woke up this morning saying, God, what do I tell the people? What do you want me to share with the people? And I just kept saying that as I was reading and pulling my notes together. What do you want me to share? And in talking to my wife and telling her that I saw that story about these athletes who supposedly are there to represent us, by the way. They represent us. By the way, us voted for Donald Trump and Mike Pence. Okay? They're attacking these men. So they're really not representing us. But the scripture I keep getting, the scripture I had this morning, and I've been reading it since 2 Peter 2, verse 10. And it goes on, and really read 2 Peter 2. I read the whole thing. I don't want to read it just because I could make an hour program out of this. But 2:10. Actually, let me go ahead and start at 9. Now, if all these things are true, the Lord knows how to rescue the godly out of temptations and trials, and how to keep the ungodly under chastisement until the day of judgment and doom. 10. And particularly those who walk after the flesh and indulge in the lust of polluting passion and scorn and despise authority, presumptuous and daring, self-willed and self-loving creatures, they scoff at and revile dignitaries without trembling. And then let me go ahead and read 11. Whereas even angels, though superior in might and power, did not bring a defaming charge against them before the Lord. We have, the arrogance. But that scripture said it right there. Despise authority. And that's what is happening now. We have just, and it's easy to blame the next generation. I feel like grandfather Gilbert talking bad about the next generation, but I see nothing good coming out of this next generation. Nothing. And I know there's good people. I'm not saying they're all bad, but when you look at it, but then you look at the media and what the media is presenting us. So I was sharing this with my wife, and you know what my wife did, Todd? My wife started to sing. My wife started to sing to me. And Karen, I might need you to help me here because I can't stay on key very well. My co-engineer, Karen. Be careful, little eyes, what you see. Be careful, little eyes, what you see. Because the Father up above is looking down with love. Be careful, little eyes, what you see. That's just what I have. When you're hearing these media stories and you're hearing all this stuff, stop and ask God, what is truth? Because they're showing you, the railers, the scoffers, the mockers. But there's a lot of people in this country that are very happy with what's going on. And we're seeing a solid economy. We're seeing a lot of good coming forward. So let's go ahead and take a quick break. And when I get back, I'm going to recap some of the tax law. First, I'm going to talk about employers and W-2 responsibilities. Then I'm going to again recap this new tax law. And then I'm going to talk about Schedule F for you farmers. This is Gilbert Talks Taxes, WCAB 590 AM. I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite.
I want to welcome Tim Schlabach and Foothills Photo Works, a professional hybrid commercial photography studio. If you're concerned about your social media image, listen up. Whether you're an executive, real estate broker, lawyer, or business owner, your image matters now more than ever. And you know first impressions count. Whether you need professional portraits, corporate headshots, images of your products or facility, aerial photography, and videos of buildings, boats, or large acreage, affordable professional help is here for you. Foothills PhotoWorks can create media that will help your prospects get to know you better and help you look your best. Call for an appointment. That number is 828-668-2304. Mention this ad and receive 15% off your first session. That's 828-668-2304. Foothills PhotoWorks, your media professionals.
We are back. Gilbert Talks Taxes right here, WCAB 590 AM. Todd, maybe that song needs to be my theme song.
Could be.
We might need to replace the Morse code after 5 years. We might need to replace the Morse code. Although the Morse code is still the call for help, the international save our ship. But Karen reminded me about all the other verses with that. So I got a text, got an email, and had this situation in my office this week. If you're an employer, what is the employer responsibility to get W-2s to your employees? Where does your responsibility lie, and how much should that responsibility, how much of it falls on you? Okay, this one's simple. Now, whether you want to do more, and I'll give some examples of what some employers do, but your responsibility as an employer is to send a W-2. Now, this also goes for a 1099 miscellaneous that you would send to a vendor or a subcontractor. Your responsibility is to mail it to them, United States Post Office, to the address that you have on record that was provided to you by that employer or subcontractor. That's it. You have no other responsibility to them. You're not responsible to make sure that they got it. You don't have to send it registered mail. You don't have to send it certified mail. You don't have to hand deliver it. You don't have to put it in their paycheck and make sure they get it. None of that's your responsibility. Now, a lot of companies now in this digital age we're in have portals on their website, or they will use a third party. There are companies that offer this service, and the data, the W-2 is on there. The IRS rules on that is as long as they can download and print a W-2 that meets their specifications of what a W-2, what's supposed to be on there and how it's supposed to look for processing. As long as you achieve that goal, they don't care how you get it to the employee. It just needs to be available to that employee or in the mail by January 31. Okay, and that's it. You're done. Let's say you mail them, because most of the ones I deal with are mailed. Although the portal idea is more and more, most people will either get it at their work in their last paycheck, or a paycheck, or it will be mailed to them. Now, if you're an employer and you mail the W-2, and that W-2 comes back to you with that little yellow sticker that says undeliverable for whatever reason, no such person, no such address, whatever, it comes back to you, you just take that, don't even open it. Just take it, put it in their file, their archive file, whatever you do. You can even scan it. Put it in their file and just have that record. You did it. And that's it. You have no responsibility to find this person, to call them, to say, to try to deliver it to them. I had a situation. So let me finish the thought. It is the employee. It is their responsibility to provide you with their correct mailing address. Now, I would tell you not to email unless you have redacted. That means you've somehow omitted most or all of their social security number from that W-2. Most companies right now are doing what we call the 5-digit redaction, a 5-digit redact. That means the first, you've seen this, you'll see your social security number on something, and the first 5 numbers will have X's. You will only see the last 4 digits of your social security number. That's a 5-digit redact. That's acceptable. The idea is you're liable if you email that thing or even fax it and it gets into the wrong hands and the entire social security number's on there and an ID theft happens. You could be potentially liable. Okay? So just avoid that. Don't email it. Just put it in the mail. Just keep it simple. It's 47 cents to mail one of them things right now. And I know people do a lot. People mail a lot. I use a third party to prepare W-2s for all my clients. Very, very reputable service. They handle all phases of it. I input it. They mail the recipient, the employee, a copy. They process a copy to the IRS. They mail you, the employer, a copy in the mail. Keeps it simple. And it's very cheap for that level of service. I find it very cheap. I don't have to mess around with it, buying envelopes and doing all that stuff. But most small employers just have a few employees. It's probably the best way to go to do this. But getting back to it, you as the employer have no responsibility other than what I just said, getting it in the mail to them. It's the employee's responsibility to give you a current and correct mailing address. Now, it can be a P.O. box. It can be a physical address. That doesn't matter. It can be either. So I had a scenario, actually I had a scene this week where the employee who's been working for the company for 1 year has had the wrong address on file. The wrong address has been on every check this employee has gotten, and all year he never notices that this is wrong. Well, he doesn't get his W-2. The employer mailed his W-2. So then the employee calls the employer and says, I'm at my tax preparer's office. You need to send somebody up here right now with my W-2 or I'm going to report you to the IRS. Or something like that. This is actually, I've had several of these, so I'm putting them all together in one story. I had one person that was threatening the employer. He was going to report him to the IRS for not getting it to him on time. It turns out that the employee, in all of these cases, the employee had given the employer the wrong address. Or they had moved and had failed to give him his new address. In the one case, the address was a wrong number on a P.O. box. In the other case, he had moved. And then you have I went to college or something. But they expected, in all these cases, they expected the employer to just drop what he was doing and get them their W-2s right now. It doesn't work that way. You as the employer don't have to. Now, you may want to, take responsibility and, of course, mail the correct one to them. But as far as it being your responsibility, no. It is the employee's responsibility. Okay, and I can't say that enough because we see this a lot. And then they want to blame you for it because they didn't take the responsibility to keep it current. Because we get a lot of it. My software tells me how many W-2s they had last year. So I ask them, did you work for so-and-so? Oh, yeah, I worked there for a couple of months, but I haven't gotten a W-2 yet. And you haven't gotten a W-2 because, well, I don't know, maybe it's because I moved or something, I don't know. Well, we need to put this on your tax return, and it's your responsibility to tell them. If you're an employee and you haven't gotten your W-2 by now, something's wrong because you should have gotten it. Now, with more and more employers moving into a portal situation, what that is where they're going to give you, instead of you getting a W-2, a lot of them put it on the memo of your pay stub. Go to www.whatever, and they'll give you a PIN, or they'll say use your social security number as your login, and you go to a portal and you log in, and you download it. What a lot of employers are doing is they'll give you 1 year. It'll be on this portal for a year. These things cost money to maintain, okay? So they keep it on your portal for a year. After that, you have to pay to access that portal and download your W-2. This is legal. They can do this. You've had 1 year to get that W-2. I actually have had people, more than one, come to my office. I didn't do my tax return last year, the last 2 years, and I can't find my W-2s. So call the employer. The employer, actually, it's one of the large staffing services that is very active here in the county, and several counties around here. Large staffing service. They use this third-party portal. So I called them. Can I please get W-2s for so and so and so for these years? Go to our website, log on, and it was $10 per W-2. Well, the person didn't want to pay the $10, and I said no. This is the only way you're going to get it. Oh, well, that's illegal. They shouldn't charge me for that. No, it's legal. They can do that. You've had a year to download your W-2. So you can do. So they do this. Most employers, though, I've had people that for whatever reason haven't filed tax returns, prior year tax returns. Most employers will work with you. Now, the IRS does not have your W-2 on file. It's not like you call the IRS and they're going to pull it up on a screen and tell you what's on there, or they're going to mail you a copy. What they will have, and this usually doesn't post to the system till somewhere around June and July. Now, it may happen sooner. I know they're trying to get it sooner. They're trying to get it to be more in real time. But by the time, see, the W-2 information goes to SSA, Social Security Administration. They put it in their system. Then the IRS downloads it from their system, this data. And the way the IRS gets it, it doesn't look like a regular W-2. And it does not have the state information. So if you get your W-2 from the IRS, which again, what you get is a transcript. It's a wage and earnings transcript. It's on the IRS. You get it from them. It will not have the state information. And believe it or not, a lot of states do not have your employer information. They rely on that W-2 to know how much you paid. Many states, the way they work it is when you send in your tax return, they match that employer number to that employer account and pull your information off that account at that point. They don't have, like the IRS has, an account set up for you under your Social Security number with your information. So I have actually had states where people have not been able to get credit for money they've paid into that state because the state doesn't maintain that information. So all that to tell you, employees, these W-2s are very important documents that you need to keep and save, because getting them is not always that easy. Companies close. When a company closes, there is no recording or archiving requirement. That company does not have to have. I've had this where people have come in. Well, the company went out of business. Can you call them and get my? How can we find them and get my W-2? No, they're out of business. They're closed. I shared the story about the company that went bankrupt, and it was just fortunate I was able to find the attorney who was handling the bankruptcy, only because I knew where to look, because he mentioned they were in bankruptcy and I knew where to go. And I found the attorney handling, called him, and he happened to have the information. But I thought that phone call was going to go. I thought, let me just make the phone call, but it's probably going to go nowhere. When the attorney got on the phone and said, "Thank you for telling me that, I'll take care of it," I was shocked. Otherwise, there were about 5 or 6 people that didn't get their W-2s because the company went bankrupt. And he said if we had waited a couple of months, he wouldn't have been able to have done it, because he was going to turn all this information over to somebody that was getting all these assets. So, and who knows who that would have been. So it's a very important document. But again, you employers, you have no responsibility to follow up with these people to make sure they got it. You don't have to send it certified. You did your job. That's it. Employees, it's your responsibility. Most of the problems I find is because the employees did not follow up. It's time for a break again. Todd, it's happening. It's going by fast. Let's go ahead and take a break. WCAB 590 AM.
This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300.
Gilbert Talks Taxes. We are back. We are back. I've got a lot going on here. We got a phone call. Did he? Oh, let me give me 1 second. I've got somebody's asking a question here. If I can get my phone open, I can go ahead and give him that. I can go ahead and answer that. I can do two things at one time. I'm going to talk a little bit about for the farmers out there. Schedule F. Let me go ahead and get into that, and I'll talk about tax law after this. What I get a lot is people that are, and I have a lot of farmers. I have farmers in all stages of farming. I have farmers that are what I would call a hobbyist developing a farm, meaning a farm is a long-term investment. It's a long-term venture. You know, you've got large agri-business farms. I'm from Illinois, and in what we call downstate, we have large corn and soybean producers, huge operations, multi-million-dollar investments in equipment, storage, silos, and I love working with my farmers. Those of you that are my clients that are listening, I know there's a few of you that listen to me on Saturday mornings, and I love your business. I love what you do. I think it goes back to when I was a child in Illinois. I used to get up at 6 in the morning and listen to Orrin Samuelson in the Farm Report. I was little and I would listen to this, and he would come on it from 6 to 6:30, and he would give the Farm Report. And they'd go all the commodity prices and talk about pork bellies and all that stuff. And I thought, this is really interesting. I just loved it. Corn prices and silage and all that stuff. And because where I grew up, it was a big agricultural belt. There was a lot of corns produced where I'm from, DuPage County. A lot of corn. Well, in Peoria is, of course, we've got Caterpillar and John Deere. Right there, it's just huge. So I've always enjoyed the business. These are long-term investments. This is not something you get into. It's not like opening a restaurant or all these other small businesses that I deal with. Construction, you're dealing with long-term products. You're dealing with long-term investments. So you'll have people who are considering income-producing farms as they get ready to retire, so they may start working these things younger. We have that. Where they've got 20-year timeline. They want to develop a herd, maybe develop an orchard, because as you know, fruit trees take a while to start producing fruit. So they start that, and the question is, at what point can I start writing this up as a business and start putting this on my tax return? Because you start investing money and you start spending a lot of money. The big question people have is, well, the IRS says that if I don't make money, it's not a business. I have to be making money. But let me talk about my blueberry farmer. The blueberry farmer was telling us he's got 167 plants. He took 5 years developing his soil before he even put the bramble bushes in the ground. He had, the state ag department come in, do a soil analysis. He delivered 5 or 6 tandems of sawdust, started developing his soil, tilling it up, breaking it down, getting those things in before he could even get it to the point where they're producing enough that he could even consider selling them. It takes a few years. At what point do you start producing this? So So we have a lot of conversations about this, equipment purchases. I recommend that if you're considering this, just go to irs.gov and download Schedule F, F as in farm. It's called the Profit and Loss from Farming. That is the form. And get familiar with that form, because there's a lot of things in there that you're going to address later on, and you don't want to be sandbagged by something, because these things have long-term implications. I'm being real careful what I say. I don't want to give any real specific advice, do this, do that, because everybody's situation is different. Get involved with the state ag department. Get involved with specifically what kind of crops you want to grow. There are associations. They can give you some advice. As you read through the form, it'll talk about farm income specifically is a big issue. I want to talk real quick about some people that will take out loans, a loan to fund their farming activity. Whether you expense the interest from that loan right away, do you capitalize it? If you put your crops up, here's an example. This is very complicated, and you really need to sit down and consult with somebody. Whether you talk to me or you talk to somebody else, get a good accountant, CPA, EA, enrolled agent, which is what I am, that's been involved with this and has some other farm clients. Because you're going to have questions about, should you expense something right now, mean write it off right now? Because that's what everybody wants to do. Let's expense it all right now. I bought all this stuff and I have an expense. Or do we capitalize it? Capitalize it means we just recognize that expense as an asset and carry it out a little bit longer, because eventually the goal is you're going to be making some money from this thing. And getting back to the question that a lot of people ask me, the IRS says if you don't make money from this right away, it's not a business, and they'll disregard your expenses. And that's true. If you start a business for the sole purpose of having losses and not paying taxes or reducing your taxable liability from your real activities, which is, your income, your work, your job, your W-2. So let's just start a business that was going to lose money. We know it's going to lose money because this idea, whatever it is, we never intended to make money doing this, but it's going to lose a pile of money and it'll bring down our taxable liability. People do that. Not my people. I don't condone doing that. That in the long term, that will backfire on you. The IRS will consider that a hobby, and they'll disregard your expenses. They can go back 3 years and disregard your expenses. If they say it's fraud, and it was willful fraud, and it was a scheme to defraud the United States government, they can go back to the beginning of time and look at your tax returns, and you don't want that. That's one mess you don't want to get in. So be careful. But they also understand that some of these ventures are long-term ventures that are not going to start producing money right away. Even farmers that are successful have a hard time making a profit. And they're doing things, they're selling their produce, either whether they're selling it wholesale or they're selling it retail, whether they're working the farmers markets or they're selling to wholesalers who then turn around, especially fungible goods. Fungible goods are like corn. Corn all gets thrown into a big old silo. It doesn't matter whose corn it is. Corn's corn. It's sitting in a silo. That's called a fungible good. It's all together, especially fungible goods. If you're doing that at a wholesale level or a retail level, you are trying to make money. Your goal is to make a profit. Whether you made one or not, it is your goal. You have a business plan in place, or somewhat of a business plan, and this thing has a goal. I often see people they have some land, they'll throw some livestock on the land, and they'll say, I have a farm. And they want to write off things to keep for their livestock and call it a farm. Well, a couple of llamas, a horse, and a cow is not a farm. And the IRS is not stupid. And they're going to know, they're going to see that. You've also got, I've got, in this area, particularly in this area, beekeeping has been a big activity. We have a really dynamic beekeeping community, for lack of, I don't know, what do they call themselves? Hive keepers, beekeeping community, very active, very knowledgeable. We have a really, a lot of wisdom here with beekeeping. I've had several of them. I do tax returns for a couple of them, and they are producing a lot of honey, and they're selling it at the local markets. Some are selling it through local restaurants. Some have produced enough they can do some wholesale operations. Some are selling it at their farms as at a farm stand or a you pick kind of operation where you come in and just get whatever they have. But you're not making a huge profit. You can do that, and you can lose money. The issue is not whether you made a profit or not. The issue is that you develop this thing and start this thing to make money. So getting back to the insurance as an example of where you really got to have a hold of some things, if you, or not insurance, I'm sorry, loans, if you pledge to future crops to pay this loan, so you've borrowed to get a crop in the ground, but you pledged that crop as a collateral for that loan, we would account for that one way versus if you just didn't pledge the crop and you're just going to sell it and pay back that loan, we'd account for it another way. And I don't want to get into the details of it because it's really one-on-one advice, and we need to talk about what your goal is and what your plans are. But as you move through this, it'll hit on a lot of things. And those loans I'm talking about, by the way, are the commodity credit corporation loans, the CCC loans. You don't report CCC loan proceeds as income. However, if you pledge, and I'm reading here, however, if you pledge part or all of your production to secure a CCC loan, you can elect to report the loan proceeds as income in the year you receive them. If you make that election, then you report them on, and then report them in that section, and then there's a way to treat those loans and forfeited loans. So moving through this, the IRS has very specific rules, right down to how to treat certain crops. Certain crops have different recognition cycles, whether it's 2-year or 4-year, and they know what they're doing. Okay, and I'm starting to run out of time, and I barely just scratched the surface of this. That's why I didn't get into it last week, because I knew I just wasn't going to have time to get into it. But let me tell you, please download that. Download, if you're considering a farm, or if it's something you're already doing, but you haven't been reporting it on your tax return, take a look at Schedule F. Take a look at the Schedule F instructions. You go to irs.gov. Just read through it, and you can fine-tune, and you can see a lot of the things you're doing. Now, there's a lot of advice on the internet about this and that. Please be careful what you read. Be careful, little eyes, what you see. Because some of it's good, some of it's bad, and you got to consider the source of it. Another thing that farms, you got to look at is when you're doing your accounting, are you going to be cash accounting or accrual accounting? I'm going to get into this more. I'm really going to get more in depth. Let me reach out to some of my farmers and specifically as we're doing tax returns, pull some scenarios together, some real life things I'm running into. But I just wanted to make you aware of that. You've got all kinds of issues with feed. Are you prepaying feed for business purpose? Again, the IRS, as you read through this, you'll see that something wasn't made merely to avoid, I'm reading on page 7, line 16, This is exactly the point I'm trying to make. The prepayment, if you make a prepayment for feed, do you expense it in the prepayment or do you expense it when you actually get it? One of the questions, because they call it a test, one of the test questions is the prepayment had a business purpose and wasn't made merely to avoid tax. So as an example would be, this is an example I see, corn commodity, it's down right now, and I'm just saying this is an example. I don't know if it is or not. Corn as a commodity or whatever, soybeans, peanuts, whatever you're feeding your livestock, sweet feed, whatever, as a commodity is down right now. So let's load up on some. We know we're going to be using it in these increments. We know it'll stay good and dry. Let's have it here in the barn. Let's have it ready. Let's prepay for it. Let's buy it on a future contract. They're going to deliver it in such and such a date. We're going to prepay it now. Had nothing to do with taxes. It was a business decision. Okay? So those are the kind of things that when we're planning your farm accounting, we need to discuss. What is it you're going to do? I mean, they even have specific rules, Todd, for how you harvest your crops. Are you going to be cutting them or yanking them from the roots? Oh yeah, it affects the treatment of it. Because what is that? That's the difference between a nursery and a Christmas tree farm. And how high above the ground do you cut it? I mean, these rules get very, very specific. It's time to take a break. I'm going to get back and talk about the new tax law and some planning for taxes going forward. This is Gilbert Talks Taxes, WCAB 590 AM.
My closet keeps shrinking my clothes. And if you have that problem, take them to Nancy at Nancy's Alteration Shop at 610 South Broadway, Forest City. Call Nancy today at 429-6900. Wear the clothes you like to wear. Let Nancy bring them back to life for you. That's Nancy's Alteration Shop, 610 South Broadway, Forest City.
It's official. I'm celebrating another year of looking fabulous, all because of RSL Salon. Whether it's a hairstyle, a manicure, or a pedicure, call Robin at 289-9110 because everyone deserves to look fabulous. That's 289-9110.
We are back. WCAB 590 AM. This is Gilbert Talks Taxes. What do I do if, I got a question. What do I do when an employer doesn't send you your W-2? Very good question. I get this question a lot. I hit on it a little bit last week. What do you do? Okay, this is what the IRS says. Last week I talked about this. People think, many people think, or at least people that have come to my office, think that if they don't get it by January 31st or February 1st, they can call the IRS and report that employer and go ahead and file their tax return with their last paycheck stub. No, that is not what happens. The IRS will actually tell you to wait 30 days. Give that thing another 30 days. And if you call after 30 days, they'll tell you to wait another 30. You're supposed to do everything possible to connect with that employer and get that W-2. Now, if the employer has gone out of business and there's no way for you to get it, what we can do, but it's not the first thing you want to do, please try to get that W-2. Try to connect with that employer somehow and ask them to get you another copy. And again, their responsibility is just to put one copy in the mail to you. That's it. But so reach out to them, get it. I actually have had very few problems with employers sending me a duplicate W-2. It might take a little bit of time because, you know, they've got other things going on, but especially this time of the year, accounting departments are very busy. But I've had, most of them are compliant. They'll ask you, do you want us to mail it, fax it, email it, whatever. They'll get it to you. So you're supposed to do that. Now, if they absolutely, you can't get them, they're out of business, there's no way to get this, you can file your tax return. You have to paper file it. You cannot e-file it. Okay? You have to paper file it. You paper file your return. There is a form, and I don't know that form right off the top of my head. I'm sorry. But there is a form, and you fill out with it in lieu of, and you give an explanation, and in there you say, I tried, the employer's out of business, whatever. This is my last check stub that I have. This is how much withholding I had and how much income I had. The IRS will then compare it to their records, and again, those W-2s will not post into their system sometimes as late as June or July, but they'll wait till they can get a viable or at least a good mix connection, and then they'll go ahead and process it through. And you will get your refund if you have a refund coming. You will get it. They're not trying to keep your money from you. They just want to verify that it is what it is. Because the big thing that's happening is the ID theft, where people are stealing IDs and using these fake companies or fake company information, fake W-2s, and processing tax returns. So that's the thing that they're guarding against. But you should try to get them. And some employers are just slack. Some just haven't done it yet. I mean, or they've had problems. They've had internal problems. You don't know. You don't know. I've seen everything from a sick bookkeeper that in a small company that was just unable to do it. She got very sick the last couple of weeks in January. And the company reached out to us, can you jump in and help us? She can't do it. So people are going to get their W-2s a couple of weeks late, but that's, they're all the employees know this, and it's a small company and they're good with it. But or to everything to a company going bankrupt, as I've shared before. Now let me talk about, we were talking a little bit during the quick break, the farmers, really there is so much. I was trying to avoid any one specific scenario, but I mean the IRS even has rules about what you're farming. Are you farming almond trees? I don't know why they picked almonds, but certain crops have different recognition periods for expensing, and I could do a whole show on livestock and livestock breeding. Todd, I just may do that. A whole show, because on recognizing and then what happens when there's a death in your livestock. How do we report that? How do you report the value of a newborn calf? How do you report these things? And then and this really, Schedule F is a catch-all for everything agricultural, which brings into question some people who say, well, I'm not breeding these animals, I'm just buying and selling them. How do we do that? So there's a lot going on. But if you're interested in this, and I haven't given my number out in 30 minutes, Todd, you're supposed to be telling me. If you need me, please call me, 828-289-9300. Be more than happy to meet with you and talk with you. Let's talk, because now we're doing a lot of planning going forward. Pretty much this year is here. About the only thing you can do right now this year to bring your tax bill down is invest in an IRA. If you're an individual, is put money in an IRA. And if just because you have a retirement plan at work does not mean that you've maxed it out, that you've contributed the most you can contribute for a tax deduction. You can still get additional deductions if you have an individual IRA. Let's say you have a 401k plan at work or some kind of a plan, and you're contributing to it. Just because you're doing that does not mean that you've maxed it out. I had one in the office just this week where she's contributing to her 401k, and she has an IRA with me, a separate IRA that from a rollover, and she said, can I contribute any more? And I looked at it and said, well, how much did you want to contribute? She told me how much she had available, and I put it in the computer, and I said, absolutely. You will get an additional tax refund, additional lower tax bill, additional credit if you put more money in your IRA. Now remember, maximum contribution is $5,500 if you're under 50, $6,500 if you're over 50. In her case, she was able to add quite a bit of money to her IRA and still get a credit. because her 401 at work was just limited to a certain percentage of her income. They only matched to a certain point, so that was all she did. It was kind of a small point relative to her income, so she had a little bit extra money. And then don't overlook a spouse being able to contribute to an IRA. Now, spouses that don't work can contribute to an IRA, because remember, you have to have a job to get a tax deduction from a contribution to a retirement plan to get the tax break. You can contribute to a retirement plan and not get a tax deduction. That's a whole separate subject. But as far as getting a tax deduction, spouses, don't forget a spousal IRA. I often see spouses not really represented equally, especially non-working spouses that don't contribute, may not have contributed to Social Security for whatever reason. I always check in a business with a sole proprietor. Should we make this sole proprietor a husband and wife sole proprietor? IRS rules allow you to put that on Schedule C, and the spouse can start getting credit for her Social Security because half of that will go to her. I've seen spouses that, even though they've been an integral part of the business for 20, 30 years, have never contributed to Social Security because it all went to the primary taxpayer's account. So look at that. Look at that. Okay, so let's get with the big changes. Every tax return I do this year, my software company put a little thing in there. I can push a button and tell you if all things are equal, everything is the same this year, a year from now with the new tax law, what would your refund be? Assuming everything's the same. Nothing changes because the program can't tell any other way. But assuming they have the same income, the same dependents, the same everything, what will be next year? Everybody, with the exception of a few people where it was zero, no change at all, but everybody is getting a bigger refund or paying less tax next year. The biggest one I've seen because of this new tax law, this new tax bill, the biggest one I've seen is $2,890. The smallest one I've seen is $500. And they're all hovering in the $900 to $1,400 price point, somewhere in there. $1,600. Todd reminded me that they are crumbs. They are crumbs. Yes, well, $1,500 to me, sir, is not crumbs. $1,500, that's more than we've gotten the last 8 years of the last presidency. So I don't know where the crumbs are coming from, but I'll take those crumbs. What's that scripture say? Even the pups enjoy the crumbs that fall from the master's table. And Jesus said, that is a good saying you've said. So, crumbs. Pelosi, what we're referring to is Representative Pelosi, who felt the need to talk for 8 hours the other day, by the way. I don't know why she did that. I haven't heard what the outcome of that was. I guess she just shared stories for 8 hours. They called it, originally the media called it a filibuster. Nancy Pelosi filibusters. And I'm like, wait a minute, she's a congresswoman. Congress does not filibuster. House of Representatives does not filibuster. The Senate filibusters. In the House, all you can do is talk a lot. And there's some rules. You just can't get up and ramble. But I guess she knew the rules and she did it. She broke the record. The longest spoken, 8 hours and a few minutes. And I've asked people, what did she say? And everybody goes, I don't know. That's what I've heard. So what we're referring to is Nancy. She called this tax break crumbs. Pathetic crumbs, by the way, because people forget that part. She said pathetic. There's nothing pathetic about it. It's the best tax bill we've ever had. So why are you getting this more money? And this is getting back to tax planning going forward for next year. Why are you getting more money? Because it nearly doubles the standard deduction for couples. The standard deduction this year is $12,700. Next year it will be $24,000. It is going to be $12,000 for singles. That was for married couples, married filing jointly. Couples, $24,000. For singles, it'll be $12,000. For head of household, your head of household people, it's going to be $18,000. That is huge. You're a single mother with 2 or 3 children. That is huge. And for people 65 and up and blind people who are legally blind on their tax return, your credit is $1,250 per person. At married filing jointly, $2,500, or $1,550 for unmarried. So this is huge. So where does this come into? Oh, Todd, are you holding the finger up? Oh no, Todd. Yeah, I can't. My time can't be up. I'm just getting into this. This is huge. This is huge. Huge. I'm going to get into this next week. I'm sorry, folks. Please give me a call. My telephone number is 828-289-9300. This is Gilbert. This has been Gilbert Talks.